More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money. I'm Jim Goddard. Today, Casey researchers Marin Katusa on the sudden big jump in gasoline prices. Hard Rock Advisory newsletter editor Eric Coffin comments on financial vampire Squid, and financial planner Richard Knowles on sanctions hammering Russia's credit rating. We talk to Casey researchers Marin Katusa right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is Marin Katusa, Chief Energy Investment Strategist at Casey Research. And Marin, what an interesting time to talk to you. Everybody I talk to who drives a motor vehicle is pointing at the sign at the service station. Why has the price gone up 9 cents a liter, about, rounded off 50 cents a gallon in just a couple of weeks? What's behind that?
A few things, but the main thing that people have to remember, it's something called the crack spread. No, it's not downtown Vancouver terminology for the drug addicts, but it's actually for all the drivers driving to work. The crack spread in the industry, in the oil sector, it's basically the differential price between the price of crude oil and the petroleum products extracted from it. So it's basically the profit margin that an oil refinery can expect to make by cracking the crude oil, the hydrocarbons, because all the crude oil is just a bunch of carbon chains, and you're cracking it up to make the different byproducts. So gasoline that we pump into our cars at the gas station, that is a byproduct through the crack spread. So that's the number one reason. The interesting thing that is happening that, the media hasn't quite picked up on in the U.S., we are hitting all-time highs for crude oil storage above ground. The U.S. is touching 400 million barrels. So what does that mean? Well, the U.S. consumed just under 19 million barrels a day. They have just under 400. So that makes about 22 days, as I'm doing the math in my head, about 22 days of actual capacity that the U.S. can work. But the big issue is what the refineries, getting the oil to the refineries. The refineries in the U.S. can do about 18 million barrels a day. And that's the whole point is that even though we are at all-time highs for storage capacity, the price of gasoline is going up because of the crack spread, and the consumer is paying the difference. And it's also in the U.S. The U.S. gas prices are going up. So the refineries are the ones raking it in.
Why has the increase, though, been so much more in Canada? Isn't this where the oil starts?
No, actually. No. If you look at what has been going on in the U.S. versus Canada, the heavy oil, Canada's a much heavier oil. We're a much more gassy basin, so the Western Canadian Sedimentary Basin, because of the polar vertex, and you look at what's going on with the gas prices, a year ago, the AECO price was around $2. Now you're looking at north of $4.50 per MCF. The price of gasoline, or the natural gas, is over doubled. So what's going on now is in the U.S., the imports of the whole crack spread and just the liquids. So even though the Canadians think that our oil patch is an oil patch, it's really more of a gassy basin with some oil credits. But with the new technologies coming in, the zipper fracs and all these new horizontal hydraulic fracturing methods, we are unlocking the potential of the basin, so that tight oil is coming out. But the reality is with the Canadian dollar where it's at, the Canadian consumer has to make up the difference. So it's a great time to be an investor in the energy sector, because the last 4 months has been a bull market that, the mining guys are very jealous of and wish they were in the situation that the energy guys were in.
Yes, in China, they sell something like 50,000 cars a day. That's a slow day. And you think about how many cars are sold in Canada in a year. And why do they need oil? Why do they need gasoline? 50,000 cars a day.
Well, I just got back from Asia, and I'll tell you there's an air apocalypse occurring right now. The pollution in Hong Kong, Beijing, it truly is disgusting. And I'm not one to really notice, that I live in Vancouver, but I travel around the world a lot. But I got to tell you, the Asians, especially in China, have a big conundrum on their hands moving forward. Is the pollution is such an issue. They have, it bothered me so much that I actually went back to my hotel room at the end of the day of meetings that I Googled, and I found out that actually Hong Kong, Beijing have some of the highest asthma rates in the world because there's so much pollution. So
a health study just found out that the average life expectancy of a Chinese person now is 6 years less than it was 10 years ago because of the air pollution.
Oh, wow. I didn't know that. That's a fantastic stat.
Oh, yes. That's why they're allowing people to have more than one child. They're hoping to have some kind of a labor force. But you notice the government still owns the franchise to sell cigarettes.
There you go. So all of these issues are combining that the reality is that even with all of the new, the Tesla car and all of these new higher efficiency vehicles, the reality is that the world needs oil, the world needs the natural gas, and it's a great place to be an investor in, and that's what we focus on. You're not going to change the realities, but you can profit from it.
Well, I think one place you might want to profit is China. They realize now they need to have California air pollution controls, and that means they're going to be using a lot of palladium and probably some platinum as well.
Yeah, if the catalytic converters keep going, but remember, there's always new technologies coming in. So the question is, it's not just about China. Look at just in North America. Look at the bull market that's going on in pipelines, in the dividend-paying stocks, in the refineries. Hell, even the railroads. People are, talking about the new change of the old rail cars to in 3 years they have to be phased out. But there's Canadian technologies. Look at Kelso, a stock that's traded on the Canadian exchange. Their technologies is the stock's gone up over 500% in the last 12 months. It's because of these Canadian innovation. People forget that CNG, compressed natural gas, is also a Canadian technology, but yet countries in India, you look at China, where cities like New Delhi, all of the vehicles have to be CNG. In Mumbai, it's 100% CNG. So the Canadian technologies are making it elsewhere in the world, but yet they're not getting pushed here domestically.
And I can tell you, too, I test drove a Crown Victoria police car powered by natural gas, and I beat the instructor for the RCMP. He hit a cone, and I chickened out and didn't hit it. But the thing is, I've never thought I'd ever be able to drive a police car at full speed with a siren going and the lights on. And then at the end of the course, I came right back towards the start line at full speed and did a 4-wheel skid. And I said, "What the hell are you doing?" "You told me, drive as fast as you can." That was a great trip.
There you go.
Yeah. So, Ukraine, Russia, what are we going to do there? And we know Russia is probably the energy basket of Europe. If they get nasty and we get nasty with U.S. troops now going into neighboring countries, what's that going to do to everyday energy prices?
It already has happened. Jim, what the North American audience doesn't appreciate or understand yet is the average European makes half of what we make in North America. But on top of that, they're paying 3 times more for their energy, for their electricity than we are in North America. When you factor in that the euro to the dollar is over 150, but they're paying twice as much at the pumps, the ratio of their earnings is a much higher percentage that goes to energy. And the reality is right now the natural gas in Europe is touching $10. The difference between Brent oil and WTI is almost 10%. So it's been priced in for a long time now. But if you go to the manufacturing hub of Europe, for example, Germany, which is probably the most powerful of the EU 28 nations, their electricity costs have gone up 25% for the last 3 years in a row. So that's over a double from already where they were at a double before that. So their electricity costs are 3 times higher for the average retail, the average citizen who comes home from work to turn on their TV, to power their devices, to heat up their apartment, than we pay in North America. And it's all because of the dependency of Russian oil and natural gas. So,
I remember a few years back, before any of this fuss about invading Ukraine happened, was Ukraine had a long-term deal with Russia for the supply of natural gas, and the Russians just said, well, that's just not on anymore. You have to pay us more. And when the Ukrainians refused to pay more, they cut them off in the middle of winter for 3 weeks.
Well, the Russians have been subsidizing the Ukrainians for a long time. We've been writing about that for a long time. It's all in my book that got picked up by Wiley & Son publishing company about a year ago. It's called The Colder War. People can check it out on Amazon or any bookstore. And what is happening today, we've been talking about for years. And the reality is, it's about supply disruptions. The big risk right now with Russia is, will Europe's supply be disrupted? And they can't just replace the supply that they're getting from Russia by importing it from Canada. We don't have the infrastructure set up. We can't even pass the Keystone XL pipeline to get our Canadian oil south. So the realities are that Europe is stranded and addicted to Russian oil and gas. And the reality is, it's not going to change in the next couple of years, and that's where the opportunity is for investors. Companies that are unlocking trapped basins, so basically bringing North American technologies to proven past-producing oil fields in countries like the UK, Albania, Germany, Poland, all these different areas, the Netherlands. These stocks are doubling and tripling in this market. There's a fortune to be made for the companies that are bringing modern technology that unlock the basins like the Bakken or the Cardium or the Eagle Ford.
Wasn't it Canadian technology that unlocked the oil in Cuba?
Well, Cuba's production is nowhere near what it is in Russia. It's actually Canadian technology that has unlocked the Russian production. So when in 1998, the Russian production was at its lowest level in 100 years. It got down to 4 million barrels a day. Now, the Russians for 100 years were producing north of 9 million barrels a day. Today, they're the world's largest producer of oil, and they're just under 11 million barrels a day. It was the Canadian horizontal drilling techniques that unlocked the Russian decline rates. And that came in when the Canadian companies came in the late 90s. It was actually Kordorovsky who brought in the Canadian technologies for Yukos that unlocked it. So, it's interesting that people are talking about, fracking and all that. Fracking's been going on since the 50s. What the Canadians were able to do was bring fracking, which was usually done vertically, with the technologies of drilling going horizontal. Then they brought in horizontal fracks. But it's been going on since the 50s.
I grew up in Alberta, and I can tell you, there's something drilling, pumping, exploring everywhere there. And it hasn't stopped.
And it won't. It's only getting better because they're unlocking, if you look at the new recovery techniques, the new EORs, the amount of oil that they're getting out of these basins versus what they used to call stranded oil wells, and then they would leave them as stripper wells. This is a good thing because by bringing Canadian technology, Canadian standards of innovation, Canadian standards of environmentalism, it's a better thing for the world, because if you go to places in Niger or even in Russia or some of the former stands, they don't work at the level that the Canadians do, and it is a good thing for the world. And I just wish that Greenpeace and all the environmentalists who are against development would actually understand that, what the Canadians are doing is at a top level. We work at a high standard. If you look at what the Canadians have done in the resource sector, whether it's energy or mining, they care about the environmental, they care about the people, they care about all the parties involved. Whereas if you've been to the Niger Delta, you realize that there's swamps of oil. If you go to northern Iraq, where Doug Casey and I were, and you see the environmental issues that are surrounding these places, it's easy to protest at home where it's nice and comfortable. They need to remember where they really need to go. And it's a lot easier to protest in Canada than it is to go to Russia and protest about how they have issues there. So it's a good reminder that what the Canadians are doing is a good thing.
Marin, one last thought here. Is there a website that people can go to take a look at some of the effort you've put into looking into the energy sector?
Definitely. If your viewers go to caseyresearch.com, that's C-A-S-E-Y research.com.
After the break, Eric Coffin on This Week in Money.
Always consult your investment professional before making any investment decision. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Eric Coffin, editor of the Hard Rock Advisory newsletter. Welcome to the show, Eric.
Thanks for having me, Jim.
We have a big question here. Vampire squid, as I understand, are large squid that jump out of the ocean to grab prey in the air. But you were talking about vampire squid in your newsletter, and maybe explain what a vampire squid is and why we might be concerned about it.
Well, I mean, vampire squid is I think it was Matt Tiabi that came up with it. It's a description, not a favorable one, obviously, for Goldman Sachs, the most profitable brokerage house on Wall Street, hated by just about everybody, it seems. In fairness, I think a lot of that's probably envy, since those guys don't ever seem to have bad years. They seem to make money no matter what happens. But I think the sort of the revolving door between Goldman and Washington, and the fact that they seem to sort of, it almost feels like they front run the market a lot of the time, annoys a lot of people. And they're particularly hated by gold bugs because they're fairly famous for dumping on the gold price. The comment that I made in the alert was about a note that Goldman put out a couple of days ago. Much to everybody's surprise, they basically moved 5 gold miners from either from nowhere or from hold up to buy. And within that note, their gold target, which had been 1050 for months now, they've been jumping up and down and pounding the table about how gold's going to drop to 1050, was quietly moved up to 1200. And a cynic like me assumes that they're going to move it up again. And a cynic like me also assumes that they were probably on the bid all the time, that they were pounding the table telling people to sell this stuff. They've got kind of a history of that sort of thing. That's why people don't like them.
A little manipulation of the market, say?
I don't want to accuse them of front running per se, but you do kind of get the sense that they talk their book an awful lot. And anybody that watches markets as often and as much as I do, you kind of get cynical about this stuff, and half the time you assume that a guy is telling you to sell is saying that because he wants to buy it, and a guy that's telling you to buy is saying because he wants to sell it. And I think there's been more than a few instances where that was clearly the case. I mean, we all know what happened with the real estate implosion down there. Goldman was one of a couple of firms that set up a couple of large mortgage funds that were essentially set up to fail. They were set up to be shorted because they realized that the whole thing was really going to blow up, and they just kind of got in front of the market. We're selling these mortgage funds that they had intentionally designed to be as crappy as possible so that they would blow up when the time came, and indeed they did. They're on the wrong end of a few lawsuits over that.
Yes, and we've seen multi-billion-dollar settlements, but that certainly doesn't reassure a person who had their home disappear underneath their feet.
No, I mean, it's although I certainly can't argue with the reasoning of the guys that sort of looked at that whole situation in the middle of last decade and said, this is going to end badly. It's kind of unfortunate that they couldn't have found a way to try to, ease things down a little bit rather than have everything go over a cliff. Because, like you said, it's all fine and good to have the markets fall until you get to market clearing prices, but in the process, like, millions of people literally lost their homes, which seems like a bit much just to make a bit of money on a trade.
Now, Goldman Sachs seems to be going against the trend here. You mentioned in the newsletter they were predicting gold at $1,050, when usually $1,100 is picked as the price of production for gold. So why would anybody mine the stuff if they couldn't at least break even? And now they're saying $1,200 gold this year, but yet prices are closer to the $1,300 mark. And I've heard other analysts say that $1,450 gold is more likely than $1,200.
Yeah, I mean, in my opinion, and in fairness, I suppose you could say I'm biased in the opposite direction, but I personally think $1,450 is a lot more likely. the 1200. I mean, part of their earlier call is based on the fact that, of course, in the short-term markets, when markets really move a long way, they tend to overshoot. So the fact that the average production price is, say, all in, it's probably north of 1200 now. That doesn't mean the price can't go to $1,000 in the short term. I mean, if there's enough concentrated selling, it could happen. I'm not sure there's as much ammunition for that as there was a year ago. The holdings in the U.S. ETFs are significantly smaller than they were then, and a lot of gold's moved to Asia and India. And I'm not sure it would be that easy for someone to really mount that kind of a bear rate and not get themselves caught.
And right now, the darling of people who want to use a metal for investment purposes, people are running to palladium like crazy because the price is skyrocketing. Yeah,
well, palladium and platinum, both of them, I mean, they've got a couple of issues. Most of both of those metals are produced in either South Africa or Russia. I'm assuming anybody who has been in a coma the last month can see what the problem with Russia is right now. But South Africa, there's been a very long-running strike going on. There's some talk that I guess the two sides are sitting down at the table, but I don't know how close they actually are. And this strike pretty much shut down the entire sector in South Africa, which is the dominant producer for over 2 months now. So it's really put a dent in the supply. Most of the palladium gets used, and a lot of the platinum, but palladium in particular, gets used for catalytic converters. That's the main end use for both of those metals. So essentially, if you've got an improving economy and improving car sales, virtually every large car market, it's mandated that you have to have catalytic converters now. So there's a pretty direct correlation between car sales and demand for those metals. And they've simply been metals that, there are companies looking in other areas, but honestly, nobody's had a huge amount of luck finding good PGM deposits outside of either Russia or South Africa. That's just where almost all of it is so far.
Gee, and you'd think Canada, with our geography being similar to both those nations in so many ways, that we might be able to find some here. But have we ever found palladium in any useful amounts in Canada?
There is a palladium deposit in Ontario that's being mined by a company called North American Palladium. It's not a especially easy or high grade one, so it's one of those miners that some years they make money, some years they don't. They have been working on, and this has been a significant capital issue for them the last couple of years. They're deepening their shafts significantly, and that should be done, I think, this year. And there are higher grade zones down at depth, so maybe once they get down there, they'll have a little more luck in terms of making money, especially if the price stays up. There are a couple of other resources that are being defined in the same region. It's basically sort of north of Sault Ste. Marie, Thunder Bay, and they're sort of okay, but they're not great by world standards. And there's certainly nothing like South Africa. You get the ultramafic reefs, the Marinsky reefs. There's 2 or 3 famous reefs in that area that have literally tens of millions, hundreds of millions actually of ounces in them. It's mainly stuff that's 2 or 3 meters wide, 4 or 5 grams per ton. It's not easy even with high prices, but there's a lot of it. So far, nothing like that has been found in North America, but you're right. We do have the right rocks for it. I mean, basically the old Precambrian rocks and ultramafic type rocks that are the source of those deposits in both Russia and South Africa. We've got a big, gigantic swath of that stuff in Northern Canada. There are companies looking, just nobody's really come up with anything that looks really great yet. I'm always on the lookout. I mean, if I see somebody hit a couple of good PGE holes, I mean, I'd be all over it, because I think the market would really love a good PGM story. Nobody's really found anything that looks like it's got size.
Well, take a look at diamonds. Who thought that the Northwest Territories, Saskatchewan, and now the Yukon would be major sources of diamonds, say, even 20 years ago? No one would have thought of this.
Not really. I mean, there was one guy in Kelowna named Chuck Fifke who thought of it. And actually, in fairness, it is similar in the sense that 30, 40 years ago, De Beers and 2 or 3 other South African producers were actually looking in northern Canada, but it took a very long time to find this stuff. I mean, you'd have to know the story of Chuck Fifke discovering the Ataki diamond pipes. I mean, we're talking about incredible perseverance. It took him years and years and years to follow the glacial indicator mineral trends back to finally get to Lac de Gras and find that pipe. I mean, it was an incredible act of perseverance for him to find that.
And I would imagine too that people made fun of him because of his obsession with it.
he was obsessed with it, and he had, he understood, he probably understood that stuff better than a lot of Canadians did at the time, because he did have De Beers as a client. So like he understood the type of analysis they were doing, because he owns a lab in Kelowna, and it was one of those companies where you sort of kept half an eye, but you didn't take it seriously. I mean, before he made the discovery, I think the stock was probably 7 or 8 cents. They'd spent years quietly doing this work, and I think as he got closer, diamond guys tend to be pretty paranoid. So as he got closer to it, the closer he got, the quieter he got. So there really wasn't any news coming out, and then suddenly, boom, here's this announcement, and like a month later, he's doing this huge joint venture with BHP and his 10-cent stock. The next thing you know, it's a $20 stock.
Anybody else around right now that's got the same kind of dream and dedication to find this stuff, or have junior miners run out of money to explore for exotic new things to mine?
No, there are still guys looking. I mean, interestingly, you're actually seeing a resurgence, and it's not a big one, it's a minor resurgence, I'd have to say, in diamond exploration, actually, because it was something that just kind of fell off the map for years. I mean, the nature of that type of exploration is it's both capital intensive, but it's also time intensive. It just takes a long time to start with a really big area and narrow it down, and even to get to the point where you've got drill targets is a couple of years. And it's very difficult in markets like this to get investors to pay attention to that line. But there are actually 2 or 3 companies, including like Randy Turner, whose company Windspear, they also made a discovery up there that was taken out by De Beers about 10 years ago. I know he's going back in, I think with Canamera, which is one of his other long-standing companies. He's kind of starting the diamond hunt again. There's a couple of companies that look like they're having a bit of success in Saskatchewan, actually finding higher grade pipes. There's some really big pipes in Saskatchewan, but they're not especially high grade. These guys have found things that look higher grade, and there's guys working right next to the original Mountain Province discovery, and they've also got a couple of they look like sills rather than pipes, but they've got fairly high grade stuff. So there's a few guys out there, but in a market like this, there really isn't room for 100 of those guys, because there simply isn't that much money around.
Is there anything else in the pipeline for Canada? Do we have new gold fields online? Do we have any new zinc mines coming on? Because, I mean, the 3 biggest zinc mines in the world are going to close in the next couple of years, and there are no replacements really for them. Or are there?
There are guys working in, there's guys, I mean, they're on the other side of the border. There's guys working in Alaska around Red Dog. There are 2 or 3 fairly large but not very high grade projects in the Yukon. Those might see more activity in the next year or 2. There's several companies that are active in New Brunswick, and New Brunswick is the location of one of those 3 big mines, Brunswick, that closed last year. Trevally has started a small zinc operation in New Brunswick, but there's also, they and probably half a dozen other companies are exploring that belt again. Virginia's got a couple of nice zinc projects that it's worked on periodically. They're a little bit farther off the beaten track. I mean, that's probably going to be the biggest problem with them, but they're fairly significant looking discoveries, notwithstanding the location. So it's one of those things where for a long time you couldn't really get a lot of interest. It wasn't easy to raise money for that stuff. And there's a big zinc resource in central British Columbia and another big zinc resource in the NWT. Both of those are being worked on by a company called Canadian Zinc. And they've been serious about zinc for a long time. It's just the market, some years the market's serious about them and some years it isn't. They're getting more attention now because people are kind of expecting, maybe not tomorrow, but they can kind of see the leading edge of a shortage coming maybe. So I think companies like that have been serious and looking, and people they know the zinc space, I think those guys will probably get more attention as the year goes on.
And where could people find the Hard Rock Advisory newsletter?
I'm probably easier to find. HRAadvisory.com will get you there. Normally there'll be something on the front page like an interview or a report on a company or something, and pulling down one of those to read them, and there's free editorials up there. But pulling down one of those reports to read them, if you decide you're interested in the newsletter, is how you're generally going to get the best price, because that's normally Nicola does my marketing. She embeds sort of special offers in those reports, and they're generally better than the day-to-day price, if you will. So that's the best way to do it.
After the break, Richard Knowles on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Richard Knowles of Knowles & Associates in Vancouver. He's a personal and corporate financial planner. He's also a recipient of the 5-Star Wealth Manager Award. And congratulations again, Richard, on that. Today we're going to be talking about Canada's job situation. The federal government claims we're one of the top job-creating nations in the G8, or now the G7. Now the Russia's been booted out. However, international studies show we're not doing that great on that front. And also, Russia's credit rating has been radically downgraded, and it's all because of the situation in Ukraine. First of all, Richard, let's take a look at the job situation. Ottawa has been telling us that, their plans for creating jobs have been working out great, but other people looking at Canada objectively say that has not been the case. What have you found out there?
Well, I think, of course, we're dealing with a political group. When politicians start talking about their own job creation programs, they're always going to be sponsoring their own positives rather than any of the negatives. It is true that this government has made some inroads into issues on the minimum wage, and also in expanding and doing certain job creation programs. Make it one of the things that it seems to counter that, however, is the fact that they've made credit more difficult in some ways to get. For example, borrowing money post 2008, 2009, and I was a bit of a critic on this. The bank system in Canada had been regaled as one of the top banking systems in the world. When the rest of the world was crashing, Canada looked like the hero of the day. In fact, we went from zero to hero overnight, and we became number one in the banking system of the globe in 2009. However, now that that was resolved, for whatever reason, the banking system and the government was imposing this kind of pressure on the banks not to lend as freely as they had in the past. In fact, they felt they should be following in the corrective measures of the global banking community. In other words, to try and curtail credit, to try and put it all under control. Well, clearly we were not in that situation. We had actually been exonerated by our system. We had shown the world that we were doing it right already, and we could have continuing on. Credit did not have to be curtailed, and therefore corporations and businesses in Canada could have been allowed to expand and have accessible credit, whereas, and including individuals, to be able to borrow to invest, to be able to expand and build their own small businesses. Instead, it had become more difficult. So on the one hand, we do see that they had made some inroads, of course, into stabilizing employment and allowing it to grow. But really, to be honest, that's politicians' talk. They really wanted us to believe that it was their doing, when in fact, I believe that it is the pure entrepreneurship of the Canadian population and employers that has allowed expansion to grow. I believe we've also been riding on a returning economy, and we also had the stability of the banking system after the big crash in 2008. So I think that is just our own resolve coming through, and they just, for all their intents and on some of the credit issues, they just basically had to stand out of the way to allow things to occur. So I disagree that they've done a lot for employment, but I think that they are trying to take the credit for it.
And, of course, one thing the Canadian government promises to do is in the next federal budget next year is to have a balanced budget, and I'm sure that's the envy of the Western world as well.
It is. However, it's coming at a major cost. They've increased taxes on a number of things, including our gasoline taxes. I mean, if you look at gasoline prices for an oil-producing nation like Canada, which we are now considered, I think we've surpassed already, and we still continue to surpass Kuwait as the second or third in the world. Right now, we're an oil-producing nation. For us to have that kind of great accolade, if you will, if you consider making a lot of oil great. However, from a business standpoint, from an economic standpoint, we certainly are number one or number two or three in the world. The reality is that we still are stealing from ourselves. We're making our own population suffer by paying some of the highest taxes and the highest costs for our own gasoline, rather than somehow supporting it and giving it a lower cost to Canadians and selling it higher on the international circuit. So I think that living in Canada has its immense cost because of our lower population. We do only have around 35 million. And because of that, we suffer tremendously on other fronts for our quality of life. We have to pay a lot in taxes, and the government seems to have no ends in their ability to look at opportunities to try and get tax cuts to go after not just the wealthy. I'm talking about middle and low income earners, to come after them if they can, because as they say, if you don't have a lot of money, you don't have a lot of time and money to fight the tax man. So it is a little bit of a burden for Canadians, but it is true. We're hitting a balanced budget. At least that's what they claim. I've yet to see it happen, and I'm maybe on the naysayer here. I'm gonna take the naysayer approach. I may be on the minority. I don't know. I've heard a lot of pundits in the industry talking about this statement they've made over the last, the beginning of the year. And honestly, most of us don't believe they're going to hit it. From what I'm seeing from my talk on the street with people I'm talking to. They think that it's probably going to be just a way of rebalancing the numbers to make it look as though we did, but in fact, probably not as much as we think. What we really need to see, in my opinion, is a cutting down of the management in government, costs of government, with all of the money flying here and there and all the fiascos under the Harper government with the senator scandal, people receiving all sorts of funds from different places, the kickback schemes that have been found under Harper. I mean, there's so much stuff all over the map that I think they're just trying to hide all the shame by talking about, well, with all of that money that seems to have gone out, well, we are still hitting a balanced budget. I don't know that that's really fair, and I'll wait to see it when I see it,
I wonder if the late Jim Flaherty resigned as finance minister, not for health reasons, but just because maybe he realized he wouldn't be able to produce a balanced budget as promised. Unfortunately, we can't ask the man now, and again, condolences to his family for their great loss.
Yeah, I don't think that's fair, Jim, because I think Jim Flaherty had, I think his timing and his need to get out of the pressure cooker he'd been in most of his life was a reflection on his health, in all honesty. I don't think that he was afraid of facing a balanced budget, but it may have been difficult. It may have been more stress than he could have handled. And with everything else going on in his life, clearly from a health standpoint, it seemed to be much wiser to be able to bail out at that time for his own health.
We'll have more with Richard Knowles next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with corporate and personal financial planner Richard Knowles. Richard, the credit rating agencies have drastically reduced Russia's credit rating due to the crisis in Ukraine. Is that going to have some kind of a boomerang effect around the world? If things get more expensive for Russia, are they going to start charging people more for their oil and gas just to cover their credit bill?
Well, that's a very interesting speculation. I really haven't had a chance to really look at this too much. One of the issues that is happening with this credit crunch on Russia is how long will it last? I mean, right now, it always has to do with how much time will be involved with the pressure cooker, the costs involved. If if there's a lot of sanctions and everything that continue on for a very long period of time, that is a very realistic approach. Costs could go up, depending, especially on oil, global oil. It's very difficult to speculate because, again, with speculation, it really depends on the individuals and the groups involved. In this case, I think that it's really, with the Ukraine, it will likely resolve sooner than even without these kinds of sanctions. However, putting some pressure on Russia as a whole seems to be a sensible approach. The only problem with that approach is we're dealing with Vladimir Putin. This isn't just anybody. Vladimir Putin has shown quite readily that when you push him, he's very happy to push back. And using forceful pressure will not necessarily resolve the issue. One of the things that is probably more important for most of the governmental leaders, such as the Americans and others in Europe, to realize is that they want to, at this point, do it in a gentle sort of way. In other words, there are political stances that politicians typically take during these international periods of time. But one of the first things they have to do is appease their own population. The Ukrainian people in each country are very upset right now with what's going on against Russia, and they're a big voting population. There's also a lot of positioning here by politicians to look good, and so they are making a stance. But at the same time, they know that much of this won't be effective with a guy like Vladimir Putin. So it's best to approach Putin with the idea and let him know, through various means that are done in diplomatic circles, that they have to do this. That it's not, it's nothing personal. We're politicians. We've got to be doing these things, but we have to do this. What you're doing, we are convinced is wrong. The way you're doing it is wrong. And we have to justify much of this to our own people. So we have to be doing this. We're going to do this in an understandable way, the same way that you would do it to us. And if it's presented that way in diplomatic circles, he won't feel as though he's being really pressured, like going to war type of feeling. So consequently, I think it could be productive in a diplomatic way. However, the reality is, with Vladimir Putin, a lot of this is going to be very senseless because he can effectively, as a large country can, with his stature and his ability with oil and other export goods, can put a lot of pressure on the rest of the world, at a time when we really don't need it, from a cost standpoint. So it is very difficult to speculate. It can go in either direction. It's too early to say, but I think will help to resolve the issue in its own time, maybe a little sooner than in its own time. The Ukraine issue, we have to remember the history. The Ukrainians were really, with the Crimea and everything, were really just part of Russia. Ukraine was created really as a resolve to satisfy certain types of issues back in the diplomatic days, but they really are a Russian type of state.
When Khrushchev became leader of the Soviet Union, he gave Ukraine, quote, independence, but of course they were still part of the Soviet Union, and I guess it was his way of trying to make up for the horrible number of deaths caused by Stalin when he cut Ukrainians off from using their own food supplies, and millions of them starved to death. And I think, that's why Ukraine was told, okay, now you're a separate nation, but of course you're still under the Soviet Union. And of course Khrushchev could not have known in any way that in the 90s the Soviet Union would be dissolved.
Well, exactly. And, I think at this point, it's the same thing. It's respect for people. And it's self-governing state now. I think Russia should keep their hands off. But they have a protectionist approach to Russians in the Ukrainian areas, and particularly the Crimea. So we have this historical precedent, protect Russia, it's Russians, and etc. It's a very, very tricky situation, very, very political. However, I think it's the greatest form of irony and, in fact, insult to have Americans who are claiming that Russia should keep their hands off here and there, and to be doing the exact opposite in places like Syria, Libya, Iraq, and threatening the world with their, global dominance in military might to go in anytime they feel threatened that their oil embargoes are going to be stopped. It's a very ironic kind of global play here. It's another type of Cold War we've entered into, in fact. This type of thing I don't believe will ever escalate to a global war. However, there's a lot of positioning right now, and the diplomacy must be brought to bear. Well-positioned diplomats that know how to discuss and understand the true nature of what goes on in the global theater should be brought to bear here. The best should be brought to bear to negotiate treaties and to negotiate satisfying resolutions to these types of crises, rather than having the military be involved. At this point, it's really a bureaucratic diplomatic resolution that should be, and I believe is indeed being worked on. However, it's still too early. These are the most, threatening moments of the whole theater, the whole play, because at the very beginning is where the mistakes are made. Until the well-ensconced and well-positioned agreements by both sides to deal with this on a diplomatic way, to resolve it in almost like sitting on a round table where you have two sides in a union kind of debate. Let's find out what both sides want. Don't go on strike. Don't do this, do that. We can resolve this. Until that moment comes, we're still in that very risky area, and that's where we are now. And consequently, the threats are now coming up. We're going to sanction this, sanction that. Well, if you do that, we could go to war over this or go to war over that. That could occur. But at this point, I doubt very much that there's going to be any kind of war. But the key is to keep military out. And if you see a military escalation, even NATO, the threats of NATO coming forward with more positioning on the borders with tanks and things like this, This is a very foolhardy maneuver. I think it was very foolhardy for the Russians to move in their tanks close to the Crimea to, well, their claim was they were protecting the Russians. And to be honest, if this was happening in Mexico with the United States and there was a bunch of Americans in Mexico that were being threatened from something by the Mexicans, you'd find tanks, military might being brought up to bear against the borders of Mexico saying, well, don't mess with our Americans or we're going to come over there and take care of you.
Richard, is there a website or an email address for you if people have questions for you about this?
I'd be happy to do that. Rich Knowles at hotmail.com or Richard K, the letter K, at customplanfinancial.com.
Thanks to our guests, Marin Katusa, Eric Coffin, and Richard Knowles, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.